Good morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, March the 20th. A little bit of action yesterday. Actually, the markets ended up closing in the red after Janet Yellen spoke after her two-day Fed meeting. Dow Jones down 114, Nasdaq down 25, S&P down 11.5, and the Russell down 9. Pretty much all asset classes sold off yesterday. That's pretty unusual. Usually get the safety haven sectors start to move higher, while all of the risk classes move low. But we had some real funky price action yesterday. A lot of the professional traders pretty much stay away from yesterday's price action because what you get is no movement during the day, and that's exactly what we have. And I'll show that to you in the chart segment. And then we have the last hour and a half to 2 hours of just wild, crazy price action. Now that the Fed has concluded its two-day meeting, we want to see where the market is now headed. Now, if you remember, if you follow the videos, I had mentioned my analysis tells me that we run up, get everybody long again, and then after this two-day meeting, we start to move lower. Now, we did have a two-day outside day reversals both days. We ran up. People got excited about stocks, and now we had this clear reversal to the downside. So we still don't know if the market is going to head lower or if indeed we start to move higher again after the announcement has been made. But I will tell you, I was looking at the video, and it's funny because the $10 billion cut again in tapering was totally expected. Everything that she did was expected. So why did the market move lower? And it was funny because they had a comment. The Fed chief was asked a question on what is a considerable time frame that the markets the interest rates will stay lower for a long period of time. So she kind of stumbled on that. She couldn't really give an exact, immediate snap right back with the answer, and then she actually stumbled, suggesting a timeline of 6 months. That's not a considerable amount of time. That's why bonds sold off. You had gold selling off. So I think that's where that key phrase came out and really spooked the markets, and everybody just started liquidating the stocks yesterday. And that's why, believe me, a lot of people, a lot of pros, they just stay away from Fed Day. It makes no sense. Let the market digest what is to be expected, and then we react. Okay. Now, before I get into the chart segment, interesting developments on some of the sectors that we're following. I had mentioned that we do like the solars, the banks, and the builders. Some technology is actually moving a little bit, holding up quite well. So I'm going to start looking to dial down into that. And of course, we were talking about some of the oil services sector, right? The oil and gas, the oil services, some of the drillers. They're starting to make some good moves, and I think there's going to be creating some excellent opportunity in the coming days and weeks. Actually, now that we have the major event risk out of the way, now we just need to see where the market is headed to position accordingly, based on what the market trend is. Now, the longer-term trend is still up, mind you. We're still in these long-term uptrend lines, but the short-term, I think we might be headed lower for at least for several weeks. Now, we don't have that full trigger yet. Okay, it's only one day, so we need to see the next couple days here, Thursday and Friday. We need to see where the market goes, and then really it's going to be next week, guys, because of the fact that we have monthly options expiration that do expire. So that's the problem, what you have here. You have a lot of these market makers, they go crazy here, and they defend their positions. So whatever you have today and tomorrow, I don't think it's going to be a true reading of what the trend is. Now, if we do start heading lower, and we start heading lower in a vicious type of way, market makers can't do anything about it. So then you could gauge that reading as a true definition of where the trend is headed. So just keep that in mind. Okay, so it's going to be a little funky for the next couple of days, but rest assured, by next week we'll know exactly where we're headed, and then we can start positioning ourselves accordingly and looking for some of those golden nugget trades that we like to look for. Okay, just quickly on the McClellan oscillator. As you can see, lower lows, lower highs. We did get that shift higher, but what happened? We still stayed within the downtrend parameter of the lower low and lower high peaks. So to me, this is nothing more than just a retracement rally, like I had mentioned to you guys. Now, we did have the RSI and stochastic crossover, but didn't break above the 50 line on neither. So that actually capped any type of momentum to the upside. So interesting. So just keep that in mind, that we're still making lower lows and lower highs, and I'll show that to you also in the chart segment. The VIX didn't really do too much. because it was the last couple hours. But now that we're basically we're within, as you can see, in that Bollinger Band. I know it's sloppy, and that's what unfortunately with the Bollinger Bands, it is sloppy. But you can see we're still in here. Let's see what happens if we start to really break out of this range that we've been in for the last maybe 6 weeks. If we start to really break out, we can really accelerate, and that does not mean that we just sell off immediately when we get there. This time something could really be brewing in the markets. We could push this and really get into that 22, 24 area, okay, in it as an increase in volatility, which would obviously put pressure on stocks, okay. Let's take a look at stocks above the 50-day moving average. As you can see here, we're still elevated here. Not much movement because it was only the last couple hours. Here's what I want to show you is the dollar. Now, the dollar is very interesting. So we had bonds selling off, we had the yen even selling off, we had gold selling off, we had all asset classes sell off at the same time. However, you had flight to safety going into the dollar. Now, obviously, the dollar is at some real key and pivotal lows, so that's going to mark a good support area. But look what's happening. MACD starting to roll to the upside, and we have stochastics making a higher low. So we do have some good momentum, positive momentum to the upside. So there's definitely a flight to quality here, flight to safety in the U.S. dollar. Now, it could be a one-hit wonder, but if it starts to break out and really gains momentum, which I don't know if that's going to really happen at the moment, but we need to really keep an eye on this. It would put pressure on commodities. So if you're a commodities trader, you like to trade the grains or the precious metals or even crude oil for that matter, you need to watch what the dollar does, okay, going forward. All right, so now wanted just to show you the 5-minute chart. You can see how ugly this is. I mean, this is totally nonsense. There's no reason, unless you could find a real good day trade. And they're out there, you know. It's just that when the markets really generally don't move, I mean, 80-90% of stocks follow what the S&P does, so you're not going to get much of anything. Now, if you constantly scan it, you can find some good trades. But I tend to really don't get into the day. I usually watch and I look and I'd say what is holding up in this downtrend. So what's holding up to the upside and holding its own in this 2 hours of craziness is what I want to look for today and tomorrow and into next week. And I'm going to show you that. All right. So let's take a look at the bonds. And again, we have this big area of bonds. We have the 200 EMA on this, as well as this horizontal trend line of resistance. So if we do break out of there and we start breaking to the upside, and then I think you're going to have some definitely additional pressure in bonds. In equities, because it's obviously inversely correlated. All right, take a look at the Japanese yen. Again, sold off yesterday, so crazy price action yesterday. But again, we have this Fibonacci retracement and cluster that's capping this move if we do break out of that. So I'll be watching what bonds and what the yen is doing. If they start to break out to the upside, and then if we can try to get gold, if gold starts to break out, then I do think that you will have that confirmation that we're looking for, that we will see some additional downside pressure. Okay, here's the ES. Now, we had an outside day reversal, but we actually recovered a little bit at the end of the day. So that put us right at the closing price of the previous day, aside from the candle, the lower wicks. We did have it, but we are still above the 20, so it kind of salvaged the day. And the volume wasn't as great as yesterday. So that if you really are a bull, you're looking for some sort of nugget, that's really what it is. We're okay. We didn't really smash, but if you were in front of those screens, I'm telling you, we had some real big distribution come into play the last 2 hours. No question about it. Funds were selling. Tick was reading negative 1,300 at a tick. I haven't seen that in 2 years. And close. So that was no question about sell programs hitting the tape. So now it's going to be funky for the next couple of days. Is why I'm telling you, be cautious here. All right. Here is the hourly chart, and as you can see, that 1272 it capped this move. We broke out and we immediately sold off again. That was your cue that we are going to have some downside pressure because we never regained that sell off on that hourly chart. And we're making lower lows and lower highs. You can see we did bounce for the 2 days, but if you take it from here to here and here, you're still making lower lows and lower highs here. So again, watch out for these areas here, the 1138, and then of course the 1838 and the 1820 on the daily chart. So let's go into the chart segment now. I like crude. I really do like it here. I like some of the oil services and the oil stocks. But I want to see where crude goes before we really start participating in some of these oil stocks, okay? But I'm watching them, and Something to keep an eye on. Here's the overlay. As far as the spiders, as you can see, we sold off again. Nothing dramatic, but we did sell off on all three asset classes. So it's just kind of funky price action on all of them. Here's the GLD. Sold off into the 200. So again, I wouldn't be trading gold here. I let it wait, let it sit, and see where we go. Maybe base a little bit here for a couple days and take out maybe this base if we can get a couple of days going into some sideways consolidation and then break back to the upside. Then I think you have a trade. You know where your stops are. Easy to manage. Spiders. As you can see here, so we really had an inside day. I'm not going to call this an outside day because price did move, but immediately closed at the previous candle's close. So inside day, but we did have, you can see the spiders, good distribution here, okay? So let's just see where the next couple of days is going to take us. And you're going to see this pretty much across the board on the 5 indices that we follow. Now, transports did close, have an outside day reversal by a few points. But let's watch this, okay? Now, the volume here was actually anemic, so that's a good sign that transport sold off on really on lighter volume than usual. And Russell actually held up well, so another one of our leaders held up well. That is also another good sign here, okay? And the Qs. Now, the Qs is interesting. Some of the older tech stocks, if you will, some of the Intels and the Ciscos and stuff like that, they're actually holding up well. And this is what I saw yesterday, which I really, really like, and that's going to be Intel. And it's not a big, quick market mover, high beta name, but the reason why I like it is because the base. Look at the base that this thing has been creating, and look at the Bollinger Band. The Bollinger Band. Now, and I don't know why I'm not getting this data here. Intel doesn't trade like this, gap up, gap down, gap up. It really doesn't trade like this. So I tried to load it a few times, but I'm going to have to take another peek at it. But if you look at this this base here, and this is the most importantly, how it's been basing for a good, maybe going into almost 2 months. We started to break out. Look at the Bollinger Band. You couldn't get any type of contraction here in the Bollinger Band. Now we broke out of this area. Now, and we did break out on volume here. This is just not showing you as much. We broke out on volume. So what I want to see is a breakout, and if you really are extra conservative, a breakout in a back test, making the higher low from this previous low. Or if we go sideways up above 25 for a couple days, you could even take that trade as well. And the reason why I like this is two things. Options are very, very cheap because basically everybody forgot about Intel, right? So there's no volatility in them. So you can buy a lot of options, cheaper options than usual, without paying a high premium. Or you could just buy the stock. So this is a great, great trade, guys. This is something that I really like, and I'm going to be watching a day or two to possibly look to step into, get into some Intel here. Okay, that's one of them. Apple. Now, Apple isn't doing anything wrong. It's just not following through here. Look at the Bollinger Bands in Apple. Contraction. We have energy building. We're going to vacate the area one way or the other. So I'd watch what Apple does here. But remember, we have the market makers playing the games. So we need to really be cautious here, okay? Now, a breakout above 538, I think she's going to test easy 560. Easy, 558, 560. So let's watch Apple in a couple of days as well. Now, diamonds, as you can see here, really sloppy. I don't really trade the diamonds, the Qs, the Dow Jones, but it is something that you need to monitor as one of the 5 as a whole for a good gauge of barometer of the markets itself. But you can see sloppy breakdown of the bearish rise and wedge. We came back up, so we're still above. Well, we actually closed below this uptrend line from November 2012. So something really to just for a gauge here. But let's go into some of these other sectors, which is really quite amazing that some of the solars is what I'm really looking at. And if you came into the day long, you did great. But if you didn't, you kind of missed it. But I think you're going to have some time. Now, here's the XLE. I love this area of consolidation. I think the XLE is what I'm watching for, and I'm going to dial into some of these stocks. And once that does break, I'll pick out some of the few charts for us to take a look at in the video in the morning. Here's the oil services sector, doing nothing wrong, just kind of back testing here. But I really want to see more of a base pattern instead of a bear flag here. This is a bearish pattern at the moment. But again, if it get back down above the 50 and kind of chop around here, something like this. This based and then broke to the downside, but this based then broke to the upside. So I'm watching for a little bit more of a base pattern. So no trade in the service sector. SLB looking better, but I want to see this thing base a little bit. and then of course the XOP, which is the oil and gas. I've been showing this to you down in here, and this is basing a little bit too, so it needs a little bit more work. Valero doing absolutely nothing wrong. If you're okay with buying at these upper end of the ranges, I like to see this thing come back in again, but this is definitely being accumulated. Again, as you can see, holding up during market sell-offs. And also, as you can see, Intel held up very well during the market sell-offs. Now, another sector that we follow is the home building. Here's the home construction. Broke out of the bearish symmetry of lower lows and lower highs, right? XHB, look at pattern recognition, same thing, broke out. Okay, now we did come in, we didn't close at the highs, but we did come in, but again, still broke out here. And we had KBH. KBH came out with earnings yesterday and broke back up above this upper end of the range here. So there's some positive news and catalysts coming into this sector. Now we have Lennar, who's coming out with, same thing here with PHM. We have Lennar that's coming out with earnings today, this morning before the bell. And I'd like to see this start to move higher. If this starts to move higher, and Lennar is one of the bigger builders, if it moves higher on earnings, I think you could start looking to buy some of these out of the money options, or look to start accumulating any one of the three, KBH, Lennar, or PHM. And that's something that you can actually accumulate. Now, if not, then you could even look to accumulate on weakness. Now, we need to see how the bank's going to react to what Janet Yellen had said, right? Really, there was no reaction, so we need to see which way the banks are going. Banks, another one I like. You can see J.P. Morgan really didn't go anywhere, but held up well. Goldman didn't go anywhere, held up well. Citibank actually rallied. So again, above that 50 is what I'm looking for. We have this consolidation base here. So above that 50, that would entice me a little bit more to start looking for some trades in Citibank. Okay, but you can see the banks held up well as some of the other sectors I just showed you. Now, last is the TAN, which is the solar ETF. Now, take a look at this. If you're following me in this video, and in December I said solars and the builders and the banks are going to be the big plays of 2014. I actually said for solar you probably see 75 to 100 by year's end, and I did mention that in a video early on when the stock was at 50 bucks. And I want to show this to you. Now YGE didn't do much of anything, right? It is a $6 number. YGE didn't do much, but look at what happened to First Solar. It exploded to the upside. This is when earnings came out. They sold them off. They rallied them. They dipped them higher, and they had a 3-day rally and exploded to the upside on pre-announcement of earnings of 2015. Okay, they're looking at a longer-term projection. Huge move up. Now, obviously, we're not looking to chase this. If you had to be in it because it gapped up and then it just exploded higher. So if you did not get it, obviously, I'm not a type of person to chase. I am now going to monitor any type of pullback to start legging into First Solar. Okay, Trina Solar, same thing, actually moved up well. This is another one that's holding a 50-day moving average. I'd like to see it chop a little bit more, but the solars will be in play in the coming weeks. So keep an eye on the bigger solar.